Hey guys, Doug the Retirement Guy. We got one here from one of our viewers. Ask us to look into JEPI, the JPMorgan Equity Premium Income ETF. So we asked, should you invest into it? We know JPMorgan, very conservative, very dominating company. So we looked into this, found out the dividend is 7.36 advertised. Now I will be upfront and tell you I do actually own some of the JEPI in my personal account. But I will be straightforward and very honest and very front with you if this is a good, bad, or ugly type fund to be in. JP Morgan Equity Premium Income, JEPI. This is their premium income ETF. They gather income from selling options and investing in large cap stocks. Basically, it gives them the opportunity to offer a monthly income stream from their options and the stock dividends that they collect. So they're actually owning the stocks that they're selling off with options. The other thing is they're investing in large cap stocks, so that gives you a low volatility equity portfolio. So really, it's a very safe equity to be involved into. It also tries to copy the S&P 500's volatility, in addition giving you that monthly income. So everyone always tries to follow the S&P 500, and this is what they started with. As we see, your dividend yield 7.36, your 30-day SEC yield at 7.05. Now that's extremely high. So that means we got some possible good cash flow coming out of here. And we have an added, they call the added value of 12.56. That's a fancy way of basically saying their total return, including dividends and growth, is 12.56. Let's take a look at the holdings they have. Holdings, you see, they're doing I always say the big boys are the Amazon, the Facebook Meta, MasterCard, Visa, Progressive Insurance, Alphabet, which is your Google. So a lot of big organizations that they have into this. They also try to follow the S&P 500 sectors. You see the communications, consumer staples, energy, finance, information technology. So everything is right there. They're across the board. Now, the other thing that we show you here on this one is your profit to earnings, or price to earnings ratio, 22.25. The S&P is 23.2. Okay, we go down to basically the growth is 10.48 versus 10.79. So S&P 500 is holding 503 holdings. JEPI is only doing 131. Now, a big thing here is you look at this turnover ratio, trailing 12 months is 174. So that means they're almost twice the times turning their portfolios over. So they're constantly turning these things quickly. So some very, very strong numbers. Again, comparing it to the S&P 500, we give that baby a thumbs up that they're following that, and our holdings look right where we expect it to be. So why would you want to invest in JPI? What's the big calling card that people want to go to this one with? Well, it starts off with that they advertise a nice strong 12.41 growth since the launch. Now, I always tell everybody this, at 12.41% return, that's over a specific period. Now, this fund is almost 5 years old. So 12.41 over 5 years, very, very strong number. That includes both income and your capital gains. So your dividends, your interest, the growth of the stock, it's all built into this 12.41%. So don't get so excited when you're seeing 12.41. You got to remember how much of this is coming from dividends. Now, the 7.05% 30-day yield tells you that you got some solid, serious cash coming on a regular basis over that 30-day period that they will watch out for. And very clearly, they pay a 7.36 dividend return, which is a nice cash flow for their retirement account. And this is what people buy this for also, is that they want that dividend. They offer that monthly dividend payout, which is what makes a lot of retirement accounts look for this. And people who are into the retirement, they're looking for this on a regular basis because either option, they can reinvest their potential monthly. So take their monthly payouts, buy the stock, and reinvest, what they call drip, continue reinvesting, buying more shares. Or what I find most people in retirement always want is that regular cash flow. So they can make their monthly payments and ensure that they have a nice stream of money coming in to pay their bills. Now, as I said, this fund has been out since May of 2020, almost 5 years now. So it gives a strong track record so you can base your future performances on. So again, when I look at this and say you have 12.41% over 5 years, and you take out the 7%, you about a 5% growth, which is definitely above inflation, and a 7% cash return. So again, I give this a very strong program of why you'd look at JPI right from the start. Now let's take a look at JPI's return. If you take a look, this is from basically the end of January. So 1 month out, they're at 2.49% in growth. 3 months out, though, they're only 2.48 total. So it shows that they had a bad November, December, it looks like. 1 year, 13.38. Again, very solid number across that board. And we go back to that launch number of 12.76. Now, I leave this one up here is because we look at the 3-year mark. Now, they're doing. You can show 1 year at 12.56, 3 years at 606. That means you've just had a loss somewhere in there. And when I dug deeper into it, their very first year that they came out with, they had 21.6. The next year, they lost 3.54 and then came back with a 9.88% return. I look at this over a 4-year mark right now, they're only at 10.76% growth. Now, I'm not putting warning signs out. I'm not saying anything negative to it, but that when they had their adjustment in that second year, losing 3.5%, is going to make some big differences on these numbers. And that's why when you're looking at retirement going 3 years, 5 years out, you have to look at the whole track history. Very common for a JPMorgan company to come back with a drop off early, but fix the problems and continue on. So I look at right now what you see in 2025 is probably going to be fairly accurate to finish out in that double-digit 12% range. So what we did, we said, hey, let's throw this into our calculator. $10,000 investment, buying it at the end of January. So we have a true hardcore 12-month look at this. We would have bought the stock at $55.96. The $10,000 we invested would give us 178 shares. And so then we went down and said, okay, what's the price of each stock each month all the way through? Now I put a red mark right in here, right in the middle of in May. This is one warning sign that I give this on this fund. And it gives me a little question onto it. And I personally went into my fund and looked back and I said, yeah, it's right. They did not pay a dividend in the month of May. And that makes a little bit of a change in what's going on. So when you're not getting a payment each and every month, you don't have a regular cash flow. You got a solid cash flow, getting about 30 to 38 cents a month, but you do have months where you missed. I went back into this and found out in 23, 2 months were missed. That's the most that they've ever missed, but they normally always miss 1 month out of the whole time. So they're giving you 11 payments out of 12 months. So just remember that. So when we look at this, your stock return, it netted a $537 increase or 5.38%. Your dividends paid a smooth 6.95%. So a little less than what they've advertised, but you're still getting a solid 6.95%, and you're getting a total return of 12.33%. So you can see how that's really broken down is you can sit and brag that I'm getting a 12% return. But it depends on how you're set up in your retirement field is do you want growth? Do you want income? Or do you want both? And this is definitely a stock that gives you both. I do give this thing a total thumbs up for the performance that they do. But you really have to ask your question. Is this going to work in what you want in your retirement fund? So let's take a look at the price charts. And this was something very interesting to me. I do show a nice solid growth. You see the ups and the downs of it, but overall, there's a pattern that it's getting up and trying to hold and maintain the higher dollar amount. The average price is $57.83 and is continuously growing. Now the S&P is growing solid, but look at the difference between the two. An S&P 500 has a smooth, solid, flat, I call it flat, slowly increase over 13 months of period. Versus the rocky road that the JEPI does. Now the JPI is going to be more sensitive because it has less stocks to deal with and selling of those options. So they have to buy on the low and sell on the high and do all that accordingly. So when you say that this is following the S&P 500, it does to a point as if it's investing in certain sectors, but it doesn't perform as smooth as the S&P 500 does. It's just a standard nice growth across the board. Now I'll give you the other side of it. The S&P 500 really doesn't pay much in the dividend. It's very, very small. But the JPI gives a nice dividend with some growth. So in summary, the stock return gives you over the past 12 months a 5.38%. That gets a thumbs up. The dividend return is a 6.95% over the past 12 months. Now, regular cash flow, it missed 1 month of dividend payments over the past 12 months. And it's also missed 2 in 23. So I've come up with my new signal, almost a thumbs up, strictly because you missed the payment. Stock return, again, total return of 12.33, includes the dividends over the past 12 months. Talked about this earlier. Yep, I give that thing a thumbs up across the board. So is JPI good for a retirement account? Well, my answer to you is going to be definitely yes. But there's 2 different ways of doing this, and I'll explain to you here shortly. And that is the value growth of JPI offers a nice 5.38% growth. And the dividend payment of 6.95% is a nice return. But remember, they did miss that one monthly payment. I know that's a small little thing, but it is a black eye. If you're sitting there waiting for funds to come in, that's 1 month you're going to miss out on. So the question is this good for a retirement account? And it's how you want to do your retirement account. Me personally, I live off my dividends. And I told you at the start of this, I own JPI. And I own it in my vacation fund. And my vacation fund, I have it set up to grow and also take vacations from the dividends. So the dividends pays for my vacations that we do. But the account continuously gets bigger and bigger. And then when I get to a certain point, I'll sell off JPI, put it into another investment, and get a bigger dividend growth from it. If you're going to sit here and live off your dividends and only live off of JPI's dividends, you're going to have to live off of a 7% return. And the idea of that is you're never going to touch the growth. So it's a good program to have. It's a very safe program. It's a very safe fund to be into. For a retirement account, it shows extremely to be safe and secure. Not a lot of risk there be taken. And when I say risk, that they're not selling zero call options or they're trying anything unique to try to bump up and grow their dividends that we've seen from other stocks that we've reviewed. But this is a nice solid producer. Would it be my number 1 fund into it? No. But it is definitely in my portfolio. So I would definitely tell you, yes, it's safe in the retirement fund. Now, I put this as a moderate buy. I don't put it as a strong buy, I put it as a moderate buy. 2 things for it. 1, missed the payment. You can't have missed payments when you're dealing with dividends. Number 2 is they're doing that basically 50-50 split. They're doing 50% in dividends, 50% in growth. I personally would like to have it all in dividends or a bigger chunk in dividends before I would ever give it a strong buy. I hope this helps out you guys. I hope this information comes to you, helping you out making that decision. This is Doug, the Retirement Guy. If you like what we're doing, man, just give us a thumbs up. It helps the channel across the board. Hit that subscribe button. Don't miss a single video that we produce. And you know what? Leave comments down below. This video came to you from one of our viewers who left a comment and said, could you do a review on this? I'd like to see if this one's worth being involved into. And so we hopefully give that information that you need. Everything helps grow the channel. Guys, I thank you and look forward to talking to you next time.